fairly well. Well, let's move on then. We have Adani Wilmar. They saw a weakish performance in the edible segment in the second quarter. Well, the food business, however, looks pretty strong. To discuss where things stand now and get a sense about demand on ground, we're joined by Mr. Angshu Mallick, the MD and CEO of the company. Good morning, Mr. Mallick. Thanks so much for joining in. Well, first things first, I wanted to ask you about your exposure to rural India. We're getting mixed signs coming out of there, while majority suggests that rural India is still in pain. I think your exposure is around a third or thereabouts. Could you tell us what's your exposure to rural India? And also, if you could tell us, are you seeing decent offtake?
See, as far as rural India is concerned, we have seen some amount of dip in consumption. Particularly, we have seen that in edible oil. Not so much in staples I have seen, but in edible oil, 40% share comes from towns which are 1 lakh or below. That has come down to 37, 38%. So around 2% dip in that segment. But in foods, we continue at around 25% share in the rural market still. So that, I think, is still a healthy sign going forward. Now, normally we have seen Q2 and is not at all a good for rural. 2, 3 onwards, it starts picking up after the harvest. Now, this year the harvest was delayed, and November onwards, the crop has started coming to the market, you have seen. And we also feel that money has started coming into the hand of the farmers. And December onwards, we will see good sign of growth. January onwards, the real thing starts. So Q4 of this year and Q1 of next year should be a big year, because agri crop has been good, let me tell you, and the remuneration on the farm output has also been good. Basmati rice, you see, rice prices are around 15-20% higher than last year. Wheat is also good, so sowing is good. Mustard is good because remunerations, returns are much better. So overall, agri business looks better.
Mallick, although the agri business looks better, just a little more details on the dip that you've seen in the consumption of edible oils. By the end of the year, what kind of growth do you see in volumes for edible oils? And currently, a little under 20% market share. Where do you see it in the next 1 year?
See, the dip that we have seen in the first quarter and second quarter, not so much on volume, but on the prices. And now going forward, these prices are very comfortable and consumption has started. We are seeing good consumption for the marriage season. And this year, as you all know, the number of marriages are much higher, and base consumption on marriages in food is almost 30 to 40% comes from grocery. So we see great opportunity for our basmati rice and edible oils. Going forward, if you see the consumption is going to be better. We have seen in edible oil at least from dip of last year to increase of around 8 to 10%. And as a company, I feel we will do much stronger than what we have done earlier.
Sorry, what is that 8 to 10%, Mr. Mallick? Good morning.
Which one?
The 8 to 10% that you mentioned, that is an improvement that you expect.
These are all volume growth that we talk of, not value, because value-wise, market is not in our control. But volume, surely we are strong, and quarter 3, we will be at least 10 more than double digit, surely, and stronger double digit growth over last year.
Volume growth in edible oil?
Yes, yes.
Okay. Because
food business, we have been growing steadily.
Got it. No, because Q2 volumes were about 1% lower year on year. You're saying Q3 volume should be 10%, at least 10%, if not more. And Q4 and Q1 of 24 will be even better. I mean, that's when the real kicker will start to come in, is what you're saying. What's the split right now between edible oil and the foods business for you?
See, the food business has been growing steadily at around 40%. Last year, on a value basis, it was around 6%. This year, I think it should be around in the range of around 8 to 9% at least. And overall, food business should be for 4,000 crores plus.
All right, Mr. Mallick, input costs have cooled off. So could you tell us, what is the cool off for your raw material basket? And will that flow through to the margin perspective? Because, I don't know whether you're passing it on to the consumers, but give us a sense on that front. Will margins improve from here?
So between Q2 and Q3, surely the margin pressures are much lower, honestly. Q2, we had a margin pressure because we wanted to hold on to the market share, which we feel is primary importance for the organization. But Q3, the margin pressures are low because the commodity prices are low. And as you know, brands always do well when the commodity prices are low. And we have to reduce the price at that speed. And we are comfortably placed this quarter.
But you're not giving us the numbers, sir. Your raw material basket has cooled off by how much? If I compare Q3 to Q2, there is some relief, which is good news for you. But how much of it will it flow through in terms of your margins? And are you passing that on?
See, in edible oil, the prices have come down, that you are all aware. And that surely we have to pass on to the consumers to remain in the market and push our volumes. But the margin pressures are surely much lower.
Okay. Any acquisitions on the cards? I mean, you've spoken about that in the past as well, but anything in the next 6 months?
See, it's a continuous evaluation that we keep on doing, and we keep seeing stretched assets, organization or brands. Now, all of these three we continuously do. Valuations also has to meet our strategy and how we want to place it. I find stretched assets as a better buy instead of buying companies and all that, because we already have strong brand Fortune, Kohinoor, and our other brands like Kings and other. So, and we have a distribution network across the country. What we need is assets to ramp up production fast. So that we are looking at more closely, and I'm sure we will be working out on these things fast.
Okay, when you say fast, any timelines that you're looking at in this fiscal year itself? And I mean, you spoke about stressed assets, but any segments that you're looking at particularly?
See, we are in staples. So anything in staples, we are surely looking at stressed assets, whether it is rice, wheat, flour, edible oil, mustard oil, and all that. So surely we are on that. We are also looking at any assets which are value-added products coming out from the staples. So that also we are looking at. So looking at all these things is a continuous affair and cannot say exactly what timeline. It can happen soon, it can happen a little later, but there are surely some discussions going on and several stages are there. So we are seeing that.
You want to give us the, how large an acquisition you could be looking at, the potential money that you all will allocate for inorganic growth?
See, in our IPO, we have said around 500 crores has been set aside for acquisition, and we have put around 1,900 crores for capex. I can tell you the capex will be more than 1,900 crores, and we will put more money from our internal accruals. As far as asset or brand or anything that we want to acquire, 500 crores may not be all that fully enough to buy. So we will put in more money if required, and we have no issues on that.
Okay, Mr. Mallick, I want two numbers from you. You're saying the 1,900 crore capex has an upside. So what could it be in terms of the capex? How much are you going to spend? And also earlier you said that edible oil prices have corrected and you're passing some part of that on. What has been the price correction between Q3 to Q2?
See, it in different oil has different price corrections. In case of palm, you can see the price corrections are in the range of around 10-15%. In soybean oil, we have seen around 10%. Sunflower oil, not so much, but yes, we expect 10%. But somehow sunflower oil prices are still holding on because of the tensions there in Ukraine and Russia. Overall, that has been the price dip. We have been able to pass on and still retain some for our bottom line.
Okay. And capex, you were saying you have upped it?
Capex is 1,900. We have already assigned, and I think another 50% surely will go up.
Okay. Just one final question. The food and FMCG volumes were very good this time, about 41% growth in Q2. By the end of the year, where do you expect to see that growth?
See, two businesses that we all are paying attention. One is food and staples. So we are growing at around 40%, and I am sure we will ramp up production and business and sales and distribution to continue with this growth year on year. Second business is our oleochemical business. Let me tell you, our oleochemical business is a very strong business. We almost supply 32% of the stearic acid in the country. We produce almost 30% glycerin for the country, both pharma grade and industrial grade. We also produce 10% of the soap noodles of the country requirement of around 1 million tons. We produce more than 100,000 tons. So we are a reasonably strong oleochemical player. Going forward, we have plans to invest in it because oleochemical is a very profitable business. Plus, it has a lot of synergy with our palm oil and edible oil business. So we have complete back-to-back integration in this business. And Wilmar, as you know, is the world's largest oleochemical player. So we have tremendous inner strength in terms of technology, knowledge of the business, and the overall distribution and sales of this business. Let me tell you, our soap brand, Alive, is now almost 100 crore brand. This year we will cross 100 crore. So a small toilet soap brand that we started as a ancillary, and now it is now getting into that 100 crore bracket.
All right, Mr. Mallick, we leave it at that. All the best with all your brands as well as the business. That's Adani Wilmar.